Hey there folks, tonight we're diving into the wild world of government debt. Don't worry, I promise to keep it as exciting as humanly possible, which, admittedly, isn't saying much. So, let's talk about country bonds. Think of them like IOUs for countries. Countries need money for all sorts of things, right? Building stuff, running programs, the usual government shenanigans. But sometimes they need more money than they have on hand. That's where bonds come in. They're basically loans. When you buy a bond, you're lending money to a country, and in return, that country promises to pay you back with interest. It's like lending your buddy $5, but instead of your buddy, it's a country, and instead of $5, it's billions of dollars. And hopefully they actually pay you back. Now let's talk about America's borrowing habits. Turns out the US is pretty good at racking up debt. But who are they borrowing all this money from? Well, it's not just one loan shark named Vinny. The US borrows money from all over the place. Other countries, big banks, even regular people like you and me can buy US bonds. It's like a giant yard sale of debt, and everyone's invited. Now, one of the biggest buyers of US debt is China. They own a whole bunch of US bonds. This has led to some, shall we say, interesting dynamics. It's a bit like your landlord owing you money. On the one hand, you want them to be financially stable so they can, pay their rent. On the other hand, it feels a bit weird being their creditor. So what happens if China suddenly decides to sell all its US bonds? It's the big question, the elephant in the room, the panda in the... You get the idea. Well, it wouldn't be pretty. It would be like a giant game of hot potato, with China chucking this huge pile of US debt and everyone else scrambling to get out of the way. Section 5. Shaky markets, the bond market butterfly effect. First off, the bond market would go haywire. Imagine a massive fire sale on US bonds. Suddenly, everyone wants to sell, and nobody wants to buy. Prices would plummet, and when bond prices fall, interest rates rise. That's just how this crazy game works. Section 6. The dollar's demise, currency conundrums. And it wouldn't stop there. The US dollar would take a hit too. Think about it, if China is dumping US bonds, they're essentially saying they don't have as much faith in the US economy anymore. That doesn't exactly inspire confidence in the dollar. Section 7, interest rate roller coaster, the price of debt. Remember those rising interest rates we talked about earlier? Yeah, those would start affecting everything. Mortgages, car loans, credit card debt, everything would become more expensive. It would be like a punch in the gut to the US economy. Section 8, global grumblings, international impact. And it wouldn't just be an American problem either. The global economy is all interconnected. What happens in the US affects everyone. So, if the US economy goes down, it could drag the rest of the world down with it. Section 9, debt dilemma, lessons, and future forecasts. So, what's the takeaway from all this? Well, for one thing, maybe we shouldn't be relying so heavily on other countries to finance our debt. It's like living off credit cards. It's fun for a while, but eventually the bill comes due. As for the future, well, let's just say it's a good idea to stay tuned. The world of finance is full of surprises, and not all of them are pleasant. That's it for tonight, folks. See you next time on Last Week Tonight.